Good evening, friends. Today I am trying to record the details of a session that I held in the Institute of Chartered Accountants of India, Kollam branch, about a week back, that is on 20th. So I thought I will record it so that it will be useful for all the other members and students who want to, uh, even though they were not present, they can take the benefit of this session. So the topic today is audit standards with AI. That is what is the topic today. Now, first initial disclaimer or initial assertion that I want to make it matters to be discussed in this today's meeting. We need to be very clear that this can be implemented well only if sufficient article assistants and or trained staff are available, because this is a must. I know this is something which I'm saying right at the beginning, because you should not come back at each stage that you say articles are not there, so we cannot do it. So that I just want to avoid it. So in order to make sure that we are on the same page, I fully accept this, and with that background only, I'm going forward. So with this understanding, I want to, start off the session. Can you guess what this image is? Any idea? What do you make out of it? I hope you can understand something. So if there is anything that you can make out of it, please let me know. I will show you another one. This is another one. I'm sure some of you would have guessed it by now, because some of the things, writings are very clear. If you look at it here, see BP, BP, and these are the injections and things like that. So this is basically the date when it has come, paid amount. So this is a prescription given by the, doctor's prescription. Now, what has it got to do? So I want to bring to your attention that this is also same. If you look at date, BP and all that, all these things are recorded and if the medicine is prescribed. So what I want to highlight here is that even in the medical profession, this is documented. Whatever they are giving, whatever they are observing, all the observations are documented, and this is kept in record by them, especially in smaller clinics. It is definitely. When you go to bigger organizations, bigger hospitals, and in fact, especially abroad, even about 20 years back, if you must have heard about a word called medical transcription. What is this exactly? In those places in abroad, it's a mandatory thing according to a certain act, their Hippo Act or something like that. They are supposed to record and maintain in soft form the details of the analysis and also the medicine prescribed, and all the details of the patient records are supposed to be maintained, especially because insurance requires it. So there is a continuity of what has been done over the period. That is, a patient record is maintained very well in detail. Now, that those 20 years back, even I know about it, because they used to, doctor after consulting somebody or doing any type of work, they will record it in their dictaphone and create an audio file. Once the audio file is created like that, it will be sent to India. And here there are certain specialized people who understand language, the diction, because a lot of Chinese will be there, Filipinos will be there, Latin Americans will be there, doctors, I'm saying. Their languages are very different. And these people are actually trained to understand that language and the way they speak. And they will transcribe that, whatever they are saying, into a Word document in a particular format that is given. That is also prescribed. So this used to happen 20 years back. Today, I don't know how much it's happening. It is there, but it may not be that much, because there have been tools now that has come which can easily transcribe from a dictation to the Word document. So the need for transcription has reduced substantially. Medical transcription as such has reduced. Otherwise, also we can also transcribe our dictation, as we must have tried in your mobile or something like that. You can transcribe it. But yes, what I wanted to point out about the medical profession also, the requirement to record the date, the observations and the analysis and all that is very much required. Now let us move forward. have you seen or heard or a book like this, Checklist Manifesto, How to Get Things Right by Atul Gawande? By the way, Atul Gawande is a surgeon, I think, if I'm not mistaken, he's a doctor. And he has argued in this book that there are a lot of mistakes that, in the doctor's profession that happens as hospital and all. He has done a lot of research across countries and come to a conclusion that so many mistakes happen in surgeries and so especially where the items that are used for surgery like gauze and all that is sometimes left inside the patient's after the surgery. So these sometimes create grave errors and create problems for the doctors also. Now, how he is trying to overcome that is what he is trying to suggest. Now, in that he has before that he has tried to find out, or he's been given example of a huge aircraft which is flown by generally two pilots. And most of the time, the pilots don't know even each other because they meet for the first time invariably. So there are so many pilots, no? Sometimes it may be a foreign pilot, especially in India when we started, there were a lot of foreign pilots too. We start with, and there may be a local pilot. They don't know even each other. They just shake hands when they get into the flight, but how do they manage to fly such a big aircraft? That is really a wonder. And he comes to the conclusion that it is purely checklist driven, absolutely checklist driven. So that is a wonder, and everything is checked. Even if you may see some videos of cockpits where one of the pilots is reading out, another person saying check, 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 like that. In fact, everything that is done in the aircraft, especially after landing and before the next takeoff, the other the equipment, the tire, the pet, the ATF, or whatever is been done, everything is done by checklist. It's mandatory, especially the authorities who are managing this aircrafts and all. I don't know what is called here. Those people mandate it because that is a must to maintain it, and it's really maintained properly. Now the question comes, are we not aware of this checklist? In fact, our profession was one of the earliest to adopt checklist. We go back about 50, 60, 70 years back, we have always been driven by checklist. But of late, this is somehow not being carried out, especially in the SME sector, in the sense small and medium practitioners, SMP sector, where this is not being maintained to that extent. Why? I don't know. Maybe there are certain reasons, but this has always been there in our profession. So there's nothing new for a profession like, chartered accountants or the audit profession. Checklist was always there. We are talking about doctors' profession and aircraft and all that, but this has been always there with our profession right in the beginning. In fact, our forefathers who were in the profession, they have been very much, addicted to checklist because they made sure that it is done in this way so that the work is done in a particular manner. Now let us go on, move. What is the topics to be discussed? So that is a brief about the introduction of what we are doing. Now we'll see what are the topics. So we will be discussing essay 230, documentation, say 500, audit evidence, say 580, written representation, and essay 700 to 720, audit reports, that series, and SQC quality control, practical implementation, and so on. Now, let us go to the next thing. We close this thing. Otherwise, it will interfere with my. Now, let us go to the next one. Okay. Now, let's see. Essay 230, audit documentation, a fast revision. I know audit documentation, I cannot teach you. You will all, study the subject as well as you are doing on a day-to-day basis. But yes, it's a good thing to do a revision sort of thing to get to know what are the new things and try to get hold of it. Why does it matter? Because documentation is the highest area where the quality review board, which is a part of the institute, they take up certain audit reports and find out what are the compliance issues. And they find that for small firms, documentation is the biggest problem. Big firms, they still manage to do it. And that is the most important area for non-compliance for small firms. Now, what is this documentation? Very simply put, if you do the documentation properly, an experienced auditor should be able to look at your work and analyze that work in his own way without your help, and he should get to the same conclusion. That is what is documentation, nothing else. And especially, you need to keep in mind for small and medium practitioners, documentation can be scaled but cannot be skipped, which means that you can increase it, but you cannot go below the minimum required. Now, what are the core principles? Core principles are SA 230 requires the audit file to show what this is always, nature, timing, and extent. Very simple, nature, timing, and extent. Always we have heard about this. Nature, timing, and extent. What does it result in? It results in what the work was performed, when it was performed, how much work was performed. So what was performed is nature, when it was performed is timing, how much work was performed is the extent to which it's done. So if you look at it here, nature means what work, what. Timing means when. Extent means how much. After doing all this, what do you get? The results. And then based on the result, you will have to take professional judgments and opinion of the significant matters. And then you have to review the notes and the audit partner has to sign it off. That is the ultimate core details of what is SA 230, which is documentation. This is what it's covered. Now, what are the documentation requirements normally? Standard templates of checklist, planning memo, risk assessment sheets. Now, all this, sir, I don't know. You can get it today. That's what I will tell you at the end. Now, what is then proper indexing and cross-referencing? For smaller audits, it may not be that much. At least it should be properly filed in a manner that the same way it is filed in all the audits files properly in the same way. Indexing may not be required, cross-referencing may not be required, but if you orderly save it, then that's good enough. But if you're going for large audits, then you have to maintain in a box file, every paper has to come, and then it has to be numbered. Very important, it should be numbered. What is the meaning of the numbering? By numbering, what happens? You can cross-refer. The best example to understand is tally when we do, tally when we go. From balance sheet, we go down to the schedule. From the schedule, you go down to the ledger. And similarly, you can go up also. This is what is the cross-referencing. Because if you look at it, balance sheet, you have a statement. From there, if you have given number 1, this is number 5, this is number 10. Just an example. This ledger may not be ledger, it may be some documentation and inventory papers or something like that. So what we need to do is, when you are giving this ledger, you should give that this has gone to number 5. But when you are saying this, you should say this is from where it has come, number 10. And how this has come, from here, it has gone down to, it has gone down to 5. Similarly, you can say from, this has gone up to, 1. So this cross-referencing is what is the main thing. Proper indexing means we have to number it and then cross-reference so that anyone who wants to start from here can reach here, and anyone who starts from here can reach here. That is what is cross-reference, nothing but that. Then how did you find the sampling? What is the basis of your sampling? That also you should record it. Most importantly, how to do it, that recording is very important. You may have done it, but you need to do it. So SMEs, a small population, especially, you have to record it. Any way you do it, you record it. Then maintain copies of confirmation, reconciliation, ledgers. This all I don't have to tell, but reconciliate BRS, bank reconciliation statement, or GSTR, two-way reconciliation. All these we are doing. So, but these have to be recorded. Confirmation parties or bank. All these are standard we do already. and then capture the discussion with the owners. Today also a client had come, I discussed with him and recorded what all he has done and wrote in the discussion paper. So that's how we can record these transactions. What are the minimum working papers? Engagement letter, planning memo and materiality, risk assessment checklist, audit program, not generic. Standard cannot be, they should be customized because depending on the customer business, depending on the customer's business, you need to change it. So you cannot have just the same template, you keep doing it. Try to change it a little bit so that it makes more sense. Then you got sampling link sheets where how you have done the sample, the what is the breakup of the sample, all those things. Substantive checking, basically detail checking. Analytical procedures, ratios, etc. You find out ratios. Today also I found out that I tried to find last year, current year sales. What is the movement? That was about 2.5. But when I saw one expense, which is there, it has gone up by 5 times. So then I had to ask that question, why? So this is all analytical process. We know that it's nothing to be, but we have to keep a record of it. Then confirmation, reconciliation, as we already discussed, management representation, we look at it separately. Final partners review notes. Just to prove that the partner has checked it. What is the final assembly for audit listing? Ensure all papers are indexed and cross-linked. We have already seen. Add reviewer sign-off, that is auditor sign-off. Log the file, no further edition. There are 60 days available to finish the documentation after the signing. There are 50 days. After that, nothing should be done in the file. So within 50 days, as per the our norm, we are supposed to finish the documentation part and it should be locked. Now, locking is something which in manual files you cannot do, but there should be a system that will ensure that they don't touch, nobody changes the papers in that. That is how we can do. And all the necessary documentation, if there is anything we taken over the client, please take it before that and close the file. If it is nowadays, you're getting audit softwares, to do the audit, we are getting softwares that can allow you to close the thing so that nobody disturbs it. Then you retain it for statutory period, which is generally 7 years. You have to maintain the documents in your possession and you should keep it safe. Why it matters, we have already seen that because TA, tax audit QRB, finding relate to poor or missing documentation. Many SMPs fail due to not wrong work. Audit is done, but due to absence of evidence. Work is done, but evidence is not there. Proper document, what it helps you in the time of peer review, QRB, and disciplinary proceedings. SA 230 ensures transparency, accountability, and audit quality. Now, again, these are things that we have already discussed. I don't want to dwell upon it. Same things are coming. I'll just skip for the time being. Now, these are some of the examples which I have picked up from the TAQRB issues that they have raised in their report of seeing a lot of them. These are some of the issues that has come up. What is the first one? Missing inventory documentation, which means that auditor has signed the report, but no inventory count evidence is there. He has not checked the inventory count properly. Inventory is almost 45% of total assets. And there is no attendance evidence, no valuation sheet, nothing. So you may say, what? We are not looking at any inventory. We are not getting any inventory, this thing. We are not checking it. Then in that case, first thing you have to mention in your report, especially tax audit report, you have to mention. But if it's company, you are necessarily to give a report in CARO. So you have to be careful. So what is generally done is, on 31st, ideally, your client has to go and do physical count of all the locations. But you have to also check how did the procedure for it, how did he develop that? So that is very important for us to look at what the procedure. And if possible, we should be present there also. We should be present for the verification. We don't have to count. That is not required. We don't have to count for this thing, but we should be able to present it. We should be present at the time of physical verification and see what are the procedures they are doing and check it. But again, even after doing that, whether all the records are kept in that should be very important. So ideally, we should keep, what is it to be kept? What are the instructions given for stock count during other than 31st? Whether there is system of doing it. Number two, what are the papers that they have generated, physically counted papers you have to take? And from there, you have to build up the stock values. Quantity will be there, then value has to be inserted. Quantity will be there, and then quantity value has to be done. Then you get the total value. And that is what goes to the balance sheet. This is the ideal way of doing it. So smaller audits, as I told you, ensure that it is at least they tell them to do the stock count ideally. If they are not doing, make sure what I do is I get a certificate from them. But certificate only is not enough. You have to get an inventory, stock inventory details and also get it signed. Like what will be quantity, rate if required, or amount. What is the quantity item, quantity amount. So if you get a list of it, even if it is in, not in each item wise as a group also, it is good enough. But keep it and get it signed by them. The total of this should tally with the certificate amount that is given, which is going to the balance sheet or the P&L, whatever. So all these should be ensured that if you are doing it, you have done your job. But you have to keep it because if you are not doing physical count, you have to at least get a certificate from him that he has done it. Even in the representation letter, you can get it if you want. Next issue, debtors testing not done, not documented, which means debtors confirmation were claimed as sent and verified, but no copies are written. Now, let me tell you, so what is this? I don't understand. Every large audits, especially the big four, the first thing they do when they start the audit is to ask the client to send letters to the their debtors, and also creditors. All of them it has to be sent. By doing that, what happens? The confirmation, it should be make sure that it should not go to the client. In the letter, it should be mentioned that confirmation should come to the auditor directly. That's a correct procedure. Because if it goes to them, they will manipulate something and give it to the auditor. That is not enough. In fact, Satyam problem was on exactly this, not on debtors, but the bank deposit confirmation. It was taken from the client and it was forged, primarily forged, and the auditors did not apply professional skepticism to check it. As a result, what happened? This was forged and it was wrong and it ultimately became a big problem, as you all know. Next one is analytical procedures not recorded. It is should be done. Audit files containing only revenue figures without ratio analysis. Gross margin reduced from 12 to 18% with no documentation. It has to be documented. If there is a change in the ratios, there should be a discussion with the management and we have to ensure that it is recorded. No evidence of partner review. Again, this is also very important. We'll show you some of the way how we can manage this. So containing working papers, but no sign off, date, review, nothing. So what are the requirements basically? And again, synopsis, what was done, why it was done because of risk. So depending on the risk, your area of work will also improve. What was the results that you got? What you conclude, that is judgment. Who reviewed it and when? How exceptions were resolved. These are the basic things that ultimately documentation covers. Now again, structured plates, how to do it, action plan and all is there. I'm not getting into that. We've already discussed most of the things. Final slide, very, very important. Work done, but not documented. Work not done equal to work not done. Please understand. This is how the institute takes it. Any NAFRA, everybody is taking like this. If you're not recorded the work or you're not documented the work, you have not done the work. So documentation, which you saw earlier, can be maybe scaled, but it cannot be reduced below minimum. Consistency, clarity, and completeness ensure quality. SA 230 protects both auditors and stakeholders. Proper documentation protects auditor in case of review. Good documentation elevates the professionalism and reduces risk. This is very standard, nothing complicated. Now let us look at the next one. So SA 500, again, linked to that audit evidence. How do you do it? SA 500 requires to obtain, this also we have heard so many times, sufficient appropriate audit evidence to support their opinion. What are the things? Nature, source, reliability of the evidence. Now, in order to get that, you have to design your audit procedures in response to the risk assessment that you. That's why the risk assessment, some paper we have to keep. How do you analyze the risk? Now, these are all easy to do it today. I will tell you because of AI. I will at the end I will discuss that. Evaluating information obtained from the management and external sources, whatever you have got as evidence, you have to evaluate it. Especially, you have to apply professional judgment. Using external confirmation, analytical procedures, inspection, and observation as what is the to satisfy and get sufficient and appropriate audit evidence. What SAS 500 requires? Evidence must be documented, not verbal. Evidence must be appropriate, that is reliable and sufficient quantity. Auditor must evaluate liability, internal versus external. Evidence must support conclusion clearly. What conclusion you have? The evidence should prove it. Apply professional skepticism throughout. Very important. You cannot just accept it like that. Now, what are the types of audit evidence? Inspection, that is of documents and assets. Cash count is inspection purely. Observation, some operation is happening, their observation. You can even stock count, you're observing. You're not doing it, you're checking it. External confirmation you are getting from outsiders. Even if something is being given to you, you are recalculating, reperforming it so that you ensure that you are getting the same results that is given here. You be very careful because some document they give and the total, even in Excel, this is the problem. The total may not tally because there are some hidden rows. It is not correct. So you have to do a reperformance to ensure that whatever they have given is correct. Then analytical procedure, as we have already discussed, and inquiry with corroboration, and so that you cross-check with different sources and ensure that it is correctly matching. You cannot accept one source only. Evaluating reliability of evidence. This is very important. That is, which is much best one, which is the least one, and so on. Best is the external evidence, as you all know, highly reliable. Evidence directly obtained by the auditor, that's the next best by observation and inspection. Next is internal generated evidence by the entity, maybe vouchers, you can say, some resolutions, you can say. These are internal evidence. Then meetings, minutes of the meetings. Then management explanation is the last one. So you have to take management explanation to the last one. Now, again, some examples. Cash verification, cash balance certified without any physical verification of sheet. So cash is done, physical verification not done. So even what we do is for bank or concurrent audit, every month we have to do cash count. So what we have done is a format has been done, which the staff has to physically count and give it to fill out that form, sign it, and I will also counter sign it and keep it in the file. So that is a documentation that we have checked. We may be entering in their software or something like that. That's a separate issue. But what we have done, we have to record it. Make a simple format to start with. Then you can increase. In fact, in one of the banks, what they are doing is they are asking us to check even when the manager checked it, check the cash on a periodic basis, and also checking the CCTV footage, whether it has been checked or not. See the depth that they want to check these things. These are all good things because cash verification not done by the manager is a gray area because he's a manager of the branch. No, so when issue is there, he have to be careful. He cannot take it lightly. Again, this we have already discussed unsupported inventory valuation. I'm not just skipping it. Similar to that what we have already discussed earlier in SA 230. This also we have already discussed. I don't want to unnecessarily. It's more or less same thing only. Now here, balance debtors confirmation, you can also check by subsequent reports. Same with sundry creditors also. Sundry creditors, you can ask them to give account copy. Today also one client has given me account copy. But if you're not getting it, then you can ask them, give me your ledger of the party in the next year. And if the genuine balance is there as on March, this should have been paid in the next year, right? Then only it will prove that the balance is right. Right? These are simple things that you can do it. Reliance on management explanation only is not good. Significant variances were accepted based on solely on the management's oral explanation. Oral, very wrong. Management explanations are not evidence unless corroborated separately. That means cross-check separately. That is very important. So you have to check supporting schedules, analytical procedures, etc. Minimum documentation, vendor invoice, bank statement, contracts, inventory count sheet, NRVs, data scale confirmation, and so on and so forth. So I don't have to tell you bank, GST, payroll, GSTR. If you're doing purchase, you can check GSTR two-way and reconcile the purchase that you have got uh, uh, with the GSTR two-way or 2B, whatever is applicable, you can do it. Payroll, you have to be careful. Suppose you are doing an industry where the major expense is wages, then you have to make sure that this is a risk area. So you have to do detailed check of this. So you may have to make a checklist separately for this. Detailed checklist. Say, for example, tea industry or a cashew industry. Their maximum wages is happening. So you can create a checklist separately for that and make sure that you have checked it and you fill the checklist. So that will help you to do the audit. Final slide, if it is not documented, it is not done. Again, we are coming to the same thing. So what is to be distinct? Sufficient evidence, appropriate evidence, properly documented evidence is very important. Then we can save ourselves. Use case, some of the FIO, this thing, digitizing, indexing evidence, auto cross-referencing of ledgers. These are all, if you use software, this can be done. Auto-generating sampling logs and recalculation, generating confirmation reference, summarizing. And nowadays, there are softwares. In fact, I've seen solo websites where this party confirmation letter can be generated by a software, which is available. If you pay the money, we will help you to generate the confirmation request, which can be sent directly. Even if you have the email, it will send it automatically. Preparing analytical procedures, procedural notes, etc. Next one is very important, written representation. Very, very important. What is representation? It requires the auditor to obtain written representation from the management on what? Their responsibility, that they support evidence where direct evidence not available, acknowledge completeness of whatever information they have provided. Here also, TAQRB has found major failures in this area. Findings, no representation, again, issues that has been found out, no representation letter in file. Auditor completed audit without obtaining any written representation, no draft, email, nothing in the file. So basic things, and I'm sure when I asked during the meeting, I feel so many of you have not been maintaining this representation letter for the tax. So the normal this thing is, oh, it's only a tax audit, it's not important. It's only small client and all that, but that's not important. We have to make sure that we make a system and follow that. I ensure that before signing, I get this signed for the last 3-4 years. Earlier, it was not there. The last 3-4 years, I have been very particular that I will get it signed and only sign. If at all they are very far off, what you can do is you can send the P&L and balance sheet only, and by email, ask them to take a printout, sign it and send it and scan it back and to you, and then send the full set after that so that they can get it signed. If at all that sometimes we have to finish it, but at least balance sheet P&L which you are uploading in the tax audit along with tax audit report, you ensure that it is signed. Only in the signed copy you should get it. You should sign. Before that, you have to take the UDIN as it's always there. Don't postpone taking UDIN because there is another problem. Same letter used for all clients. Again, representation letter, same, because that is very wrong, because specific disclosure relating to litigation, related party transactions, estimates, fraud disclosure, these are all specifics to certain clients. So you have to add that things. So that is why it is very important that you have to review the standard format and change it according to the client that you are handling. It may need some addition, deletion, and all that. Fraud disclosure, very, very important. In that representation, you have to ensure that it does not leave out the fraud or suspect fraud, which says that they have to confirm that they have disclosed all frauds, and fraud assertion in the letter should be there. If there is anything that fraud is appeared, they have to tell you. They cannot hide it. Next one is very funny thing, that representation was signed long before the audit completion. It was almost done 20 days before the completion. What is the problem there? Adjustments made later were not acknowledged by the management. That means, suppose it was signed on the 5th and you kept it. Now you are signing on the 27th. Now what happens? This gap, whatever is there, anything that has happened, the because of which there is an issue in the statement, the management is not accepting responsibility for that because they have only done up to 5th. So that is why it is better to get it signed around the 27th, ideally on the 27th or just around that. That's a better option. No evidence of approval or signature. That means you have taken the written representation, but it is unsigned, the draft or found in the file. No email confirmation or scanned copy. Very wrong. Written and signed representation. Because even if you look at the essay, it's saying written representation should be mandatory. Written means should be written and signed. Obviously, it should be signed. Even you can get, if you are not getting it, digital signature also is good enough. Incomplete disclosures of very important things like RPT, contingency, etc. So that also we have to make sure that it's all included if it is there. So going concern also is very important. Unrecorded liabilities, they have to confirm that there is no unrecorded liabilities because we don't know. It's very difficult for us to know all the transactions that has happened. We cannot guess that there might be some liability that they have not recorded. It's very difficult. So it is always better to get it signed by them. And a disclosure saying that there is no unrecorded liability. What a good representation letter includes: responsibility for financial statements they have to take, completeness of all information given, all related party and transactions and party transactions enclosed, all litigation claims and contingency reported, all unrecorded liabilities, no fraud known to management, going concern assessment, compliance with laws and regulations. These are all important things to be done. Minimum documentation, signed, very important. Representation letter, email if required, you can get a confirmation through email. Any explanation for unusual contradictory statements, evidence of auditor evaluating the reliability, final linkage to 230. So again, written representation is mandatory. Verbal, not audit evidence, very clear. What does it expect? TAQRB, properly dated, signed, customized representation letter, complete coverage of financial statements, proper linkage to audit working papers. Now let's go to the next one. This is again very interesting. This I will close it. We close this. 700 Cs, also very much important. Now, before we start this, we have to understand the 2x2 framework. This is called the 2x2 framework. In that, 2x2 means materiality and pervasiveness, and 2x2 means 4 columns will come. 1, 2, 3, 4 quadrants, basically. Now, what is materiality? It's not the materiality we do for audit evidence. It's not that. It is the materiality of the significance of misstatement or limitation, whether it is important to influence user decision. That is what is the materiality, not the audit evidence. It how much misstatement is there, how much material the misstatement is. That is what we are looking at. And pervasiveness is how much widespread it is, this issue of material, this misstatement, how much it is widespread. Is it throughout or it is only limited to certain areas only? So the 2x2 quadrant model provides a systematic approach to classifying audit opinions based on these factors. Understanding this framework is essential as it guides auditors in selecting the most appropriate opinion type when issues are identified during engagement. Very, very important because it will help us to understand. Sometimes we are confused what to give. Now, this is the basic thing of the 4 quadrants as we saw it, 2x2 quadrant. So what is first one? Unqualified opinion. When does it happen? No material misstatements or scope limitation. Nothing, everything clean. All tax audit, don't you agree that we are giving like that? We are not qualifying anything. Actually, it's not correct. But then that's how it is happening now. When we accept all the things, something we give as, some comments and we think that everything is okay. But we have to be careful. So no modification needed, high user confidence, standard 3 paragraphs. What is a qualified opinion? There is something material misstatement is there, but it is not pervasive. So material issue exists, but its impact is limited to specific accounts or disclosures. The auditor can still express an opinion on the overall statement. And in that case, what is used? Subject to, or except. This is the language used. Issue is isolated and remainder is fairly stated. All the other parts of the statement is perfectly, only certain part there is an issue. Next one is what? Adverse. So this is the first one, the best one. Second, third, adverse opinion. Material issues are there, misstatements are there, and it is widespread that the finance statements as a whole are not fairly presented. This is the most severe opinion for misstatements. Then, what does it happen then? Statements are unreliable, widespread requirement gap, user decision would be affected. So you're giving an opinion, but we're given an adverse opinion. The last one is disclaimer. What does it mean? Is material and pervasive scope limitation. The auditor cannot obtain sufficient appropriate evidence due to widespread scope limitation. That means he's not able to form an opinion. In that case, you have to give disclaimer of opinion. Unable to form an opinion. Evidence can be severely restricted. Unable to express opinion. Maximum uncertainty of users. So these are situations when it comes, you have to qualify like that. Now, when this when you are deciding your decision framework is, first question you have to ask, is it material? Materiality determines whether to modify the opinion. If it's an issue, is it material? Stick to the unqualified. If it is material, modification is required. What is pervasive? Then pervasiveness determines. Then next you have to ask, is it pervasive? Pervasiveness determines how far to modify the opinion. You have decided to modify, how far. Limited impact means you give a qualified opinion. If it is widespread impact, then you have to give an adverse opinion for misstatement or disclaimer for scope limitations. I hope you are understanding the quadrant. So this gives you a very clear picture on how to give a unqualified report, how to give a qualified report, how to give a disclaimer of report, and how to give a adverse report. Now let us move on to the SA 700, which is basically our audit reports formats. The purpose of SA 700, why it matters, because what does it give actually? It is a forming an opinion. Forming an opinion on the financial statements, structuring the audit report, communication responsibilities, and audit scope. TAQRB finds prescriptive reporting or incorrect report on SME audits a lot. This, of course, one thing you need to keep in mind when you're looking at it. Don't only think about tax audit. Please look at other audits, which are large, not large audits, but company audits that will help you to understand it better. What are the key components of SS 700? It would include independent auditor's report. Like that, we have to give a title. Addressee, to whom you are addressing. If it is a company, then you generally give to the shareholders or members. Opinion paragraph. First, you have to do what is the opinion that you've come. Then, what is the basis of the opinion? How did you arrive at that? The opinion. If it's qualified opinion, you have to have qualified opinion you have to write. And here, basis of qualified opinion you have to write. Be careful. When you are giving qualified, here also you have to add qualified. Then you are giving the management and auditor's responsibility. That has to be mentioned there. Then next is emphasis of matter. We look at it. What is it? If needed, only needed. Other legal and regulatory requirements, signature, date, place, and don't forget UDIN. And now the UDIN portal has also been revised. Proper referencing and structure. What it means. Suppose you are putting anything in the report, you have to cross references to the notes if it is there. You have to cross reference it properly. Some of the findings again, incorrect or missing opinion paragraph. Opinion paragraph is missing. Opinion paragraph appeared after the basis of opinion. This is also very wrong. Either it is missing or it's coming subsequent. It's wrong. First opinion and then only your basis of opinion. Basis of opinion paragraph is missing. No statement compliance with essays. And this is all happening. That's why they are all taken from the TAQRB reports, which is very interesting to read because that will help us to understand what we have to be careful. Management responsibility not properly defined. The responsibility section was incomplete. What should you do? ICAI prescribed language is the best way to avoid omission. It did not mention internal controls, going concern assessment, etc. So SS 700 requires that management responsibility for financial statement preparation, internal controls, going concern. These are very important to be included there because they have to take responsibility for it, not us. It is their statement, their baby. We are only giving an opinion. Auditor's responsibility state section is missing key points. What is the mention of risk-based audit, materiality, and professional judgment? Because we are only doing like that. We cannot give 100%, confirmation, right? Only based on materiality and risk-based audit only we can do. Therefore, we should not reduce the thing. We should keep the entire thing full standard for wide wording is required. Even if it's for a small company, we have to be careful. So what does it include? Risk assessment, materiality application, and use of professional judgment. Next is wrong reporting format for modified opinion. Qualified opinion without basis of qualified opinion section. Wrong. You have given a qualified opinion, but you have not added basis of qualified opinion. Very important. 705 is not followed. Clear modified opinion to be given, basis of modification also to be given. Missing UDIN, I don't know. Nowadays, I think we have got used to it, but without UDIN, you should not sign. That is why what I do is without taking UDIN, I don't sign. I take it only at the last moment when I have to sign. That is the clients would have signed it, and when they bring it on with their signature, only then I will take UDIN and then I will sign. Then only I will say, just wait. So only then I will be signing, right? Next, non-compliance with legal and regulatory reporting. So tax audit references they normally doesn't have, but if you want, you can include this format of 700 is separate, is standard only. So if for tax audit also, if you want to include it, where you can do it. But then the question is, where do I add it? Where do I add it? So that is where you have to be careful that the format is a little restrictive. So if at all you don't get it, you have to add it as a separate addition. Generally, the quality review board is not in approval of attaching a separate attachment. It's better to put it whatever there in the main report is in tax audit. The other one you can put it, there's not a problem. Minimum documentation, signed final audit report, evidence of review report format, documentation, supporting opinion, very important. Summary of incorrect misstatements, emphasis of matter or modification finding. Final slide, auditor's report is the only visible output or mouthpiece. I call it mouthpiece. Our only way of expression we can do of the entire audit, we can only say through this mouthpiece only. So it should be perfect. It should have the correct structure, should have mandatory wordings and proper disclosures. 90% can be eliminated if you use the ICAI templates. Next is CAM. Now, CAM is something which we normally don't see it, but it's better to know what it is so that in case if you are getting an audit suddenly which requires CAM reporting, then you have to be careful. So what does it do? It enhances the communicative value of the audit report. It provides transparency about the areas of significant attention, improves users' understanding of complex areas. What does it do? When does it 701 apply? It only applies for audit list of listed companies and certain cases where law and regulation requires CAM. CAM is not required for SME audits unless it's specifically mandated. Very rarely it comes, but better to know what it is. So what are key audit matters that require significant attention of the auditor and the selected from matters communicated to TCWD, not modification of opinion. Very, very important. It's not audit opinion modification. It's not any qualification, not a substitute for disclosure or disqualification. So you cannot say that I am putting it here and I'm not disclosing somewhere or I'm not qualifying it. You cannot do that. Qualification is separately required, which is not, you are not qualifying. Actually, that will only find a place here, which is important and which you are resolved. What I feel is the way I have understood this is that the uh, working papers of what you have maintained, especially on any issue of serious nature, how you have gone through that, how you have done the audit, and the working, how you have resolved that issue and come to that conclusion. So therefore, your working paper is what you are disclosing in the report, a scam. So what are the issues? We look at it. What are the, how to present it? It should determine areas of higher risk of material misstatement, significant management judgments, complex and subjective estimates, significant events and or transactions. So again, CAM selection is a purely professional judgment based process. So an auditor with his whole professional judgment only you can decide what will be the CAM that he has to decide. Of course, this certain has to be continuously communicated with the PCWG because they also should be aware of it, and then you decide these ones will qualify. So it's out that we are qualifying, and these ones we are not qualifying, but we have spent a lot of time and we have discussed and come to a conclusion, and this will have to be put in CAM. Common examples of CAM are impairment of assets, revenue recognition, violation of financial instruments, provision and contingency, going concern, business combination. These are all basically the Ind AS list that they're given. So anything issues relating to any item of policy or the policies relating to Ind AS, if there is any issue that needs to be highlighted. It is not a qualification. It is only something which you have looked at, which seem to be of serious. It's some divergence with the normal method, and you have the company has done it, and you've looked at it, and you have come to a conclusion. Yes, it is okay. If it is not okay, then you give a qualification, right? Here you're not giving a qualification. CAM description must include why matters was significant. This is what how you disclose it, how it was addressed. So something why it was significant, you have to say. So it should be clear, entity specific and non-standard template. And reference to any relevant financial statements or notes has to be also given. What is CAM? What CAM is not? It is not a qualification or modification because qualification has to go separately. Don't mix up with that. It is not an emphasis matter. We look at what is emphasis matter. It is not a substitute for management disclosure. You cannot say, I have disclosed, so management don't disclose. No, no, you cannot do that. It is reporting of all significant audit findings which you have found out. But if there is a need for reporting, that should not come here. So therefore, CAM is not equal to issues with audit evidence. No, it is something which you have resolved also. You found out and you have resolved. Documentation, what are the working papers must show judgment for selecting the CAM. Why other significant matters were not selected? How did you select this? Are the other matters you left it? That's also difficult, very difficult to do it. Description of CAM was addressed and linkage to documentation standards. Communicating CAM to TCG, as I told you, it is very important that the proposed CAM should be communicated and rationale for that. Changes in the CAM throughout the audit, maybe you started with something and you are saying that no, you observed it, then you make it a qualification. Then it will go out of CAM. It will not remain in CAM. So it has changed the nature. It started as a CAM, but then you qualified it, or you are put it in the EOM or something like that. How CAMs will be presented in the audit report that we have to discuss, impact of disclosure on the audit procedures. Basically, your internal paper coming out the open. Final slide. What does it do? It enhances transparency. It required mainly for listed companies, specific, relevant, and well explained. Selection and reporting require strong professional judgment. Proper documentation, communication are essential. Now come to EOM again and other matters. These are 706 EOM and other matters. Very interesting. When to include EOM, when to include other matters, we have to be very clear. What does it do? This enhances the user's understanding on the audit and financial statements. What is EOM? It refers to a matter appropriately presented and disclosed in financial. Be clear. It is something which is already disclosed in notes to accounts, which you are including in the EOM to draw the attention of the significant matters to the user. It does not modify opinion. It's not a modification. Please clear. It's not a qualification. It is only something that has been already presented in the finance statements, You're only drawing attention so that the user can easily through, because in the notes there are so many notes are there. So they will be get lost. But when you put it here, they will know, then they will look at the notes and read it properly. Place after the basis of opinion. So first is the title, then the opinion, then basis of opinion, then you get EOM, CAM, sorry, CAM, then EOM. When should CAM be used? When matter is a fundamental to the user's understanding of the final statements, appropriately disclosed by the manager. Again and again, I'm telling you, it should be already disclosed by the manager. What are the examples? Litigation impact, significant subsequent event, major uncertainty like going concern adequately disclosed, restatement of comparators. There's some other examples. Can be anything. What is other matters? Paragraph. EOM we saw. Right now, emphasis of matter, now other matters. It refers to matter not presented or disclosed in the final statements. Auditor includes it to explain something relevant to the user's understanding of the audit or responsibility. That is, audit or responsibility is said. When should OM be used? When the matter is not in finance statement needed to understand. Matter not in finance is needed to understand. Reporting responsibility differ from standard. Reporting on other legal regulatory matters. Examples, restriction on use of auditor's report. So if there are some restriction is there on auditor's report use, then that should be highlighted. Report on separate components, mentioning any predecessor's audit work if you have seen and you want to bring it, because last year's is gone, so you want to add it, you can add it. It's not, will not come in the notes to accounts, right? Difference mainly, EOM is matter disclosed in finance statements. This is not disclosed in finance statements. Auditor highlights importance relevant to understanding audit responsibilities and understanding audit and responsibilities. Both cases, it's not a modification, not a qualification. Placement of words requirement must have appropriate headings, emphasis of matter and other matters. Must refer only to relevant paragraphs of finance statements or context. Must include opinions beyond the auditor's scope. Should not replace a modified, very important. Cannot replace a modified opinion. Communicating with TCWG, it's very important. You have to communicate why this is necessary, how it affects a report, potential impact on users' perception, and it is a distinct from modified opinion. They should not think, oh, I'm modifying it. No, it's not modified. Documentation requirement, justification for including EOM, evidence supporting the matter, discussion with management and TCWG, cross-reference to financial disclosure required, you can do it, and draft and final version of the report. Summary side, EOM highlights properly disclosed significant matters. OM highlights audit-related matters outside FS. So this is within the financial statement that is given, you are highlighting. OM is something which is outside. Neither modifies the opinion. Again and again, I'm saying this. Use only when the necessary and clear justification. Ensure proper placement, heading, and documentation. Next one is again very interesting. 720. Auditor's responsibility relating to other information. Please, this EOM, emphasis of matter, OM, other matters, and other information. Please don't get confused with these things. Objective, it requires auditor to read and consider other information, identify material inconsistency with the audited finance statements, report appropriately when OI is materially misstated, clarify auditor's responsibility in the auditor's report. But then you need to understand what is other information. Other information is any information included with the audited finance statements, except, that means the annual report which is there, anything that is included there except finance statements and the auditor's report. Anything other than that, for example, director's board report, management discussion analysis, CSR report, chairman's message, additional performance data in annual reports, all these comprise of other information. But financial statements and auditable is not part of OI. What is the responsibility of auditor in this under this essay? He should read the other information, evaluate its materially inconsistent finance statement, evaluate why contradicts auditor's responsibility. Now here, the problem that we always will have is that when you are signing the audit report, at that time, Whether you will get hold of the director's report and the other detailed, analysis and all that, this is a big challenge, and we have to know how to manage it. It's very difficult, but you have to make sure that it's done at that time and ensure that it's inconsistent. So that's why parallelly this is checked. Maybe one of the audit staff has to take care of that simultaneously from the beginning. As and when they are doing it, it's to be cross-verified. It's not easy, but it's a very difficult task because some changes in the finance statements has happened because of it. It is finally get also affected in the statement. Today, of course, softwares are helping a lot, so we have to be careful. Still, we have to be careful. Respond when material misstatements is identified. Include OI in section the auditor's report. Now, key concept: auditor does not audit this information. Be careful. Auditor does not express opinion on the OI. OI is only not subject to materiality or detailed audit. Auditor only checks for material inconsistency with the financial statements. Finance statements and the other than finance statement, whatever is there, if there is a mismatch, then he has to do it. It protects users from misleading narratives. What to look for: inconsistency with audited finance statements, incorrect facts, unsupported claims, misleading performance metrics, discrepancy with auditors' understanding of the entity, missing required disclosures. Common examples of OI inconsistency: profit in MD and A, that is management discussion and analysis. From that, what is given there and the finance statement, they are not matching. Claim of no litigation in the board report or something like that, whereas there is legal issues, incorrect turnover trends, unsupported CSR activity. They are saying CSR, we have done this, but it's not supported. Incorrect related party disclosures, and so on. So many things can happen. Because today, other information is more than the financial statements. As you know, when you look at it, so much of data is put in there. So it's very difficult for us to also look at it, audit director, but it is a responsibility, and SA says that we should check it. We should not audit it. We should just review it and ensure that it matches. Auditor's report OI section must include a dedicated other information section explaining what the auditor has received, responsibility to the management, responsibility to auditor, whether auditor found any material inconsistency in it. Now, how do we go about this? You should discuss with the management after reading the information. If there is any mismatch, then you have to ask them to correct it. If not corrected by them, then you have to consider the impact of the audit report, probably add other matters or modified opinion. In that case, document all the responses, steps and responses. Documentation requirement: OI when reviewed and data when received. So when you received, when you reviewed, inconsistency, what you have identified, discussion with the management, the minutes of the meeting, management response, final conclusion where OI is materially misstated. So again, clearly we should understand the final takeaways. Auditor does not audit OI. Very important. Must read and consider it. Detect and respond material inconsistency. Material OI section in audit report. Mandatory OI section in the audit report if it is there. Otherwise, we don't have to. Proper documentation is essential. What does it do? Safeguards the user from misleading narrative. So somebody who is not reading the financials, they are not understanding, they'll read the other part of it and they will be happy with that. But actually, the finance statement is giving a different picture. So then it becomes a problem for the user. So we have covered this. Now, finally, we will just look at the last slide and then go to practical implementation. This is SQC, standards on quality control. What is it? Simply is that it is a quality control system for accounting and auditing engagements effective from April 1st, 2009. Mind you, this is from 2009. We are not even aware. I became aware because of the peer review that was done, and the form 1 or something which is done to be filled. It has got one annexure which is only SQC. Only SQC questionnaire is there which you need to fill up. And I suggest that you can take that form, blank form, download it from the your peer review board and try to fill up that particular form so that you are at least knowing what is coming in SQC. So I will not go in too much detail, but a brief thing on this, and so that time is short. So we have to somehow conclude it as fast as possible. What is the core purpose? It establishes establishes firm's quality control and ensures compliance with professional standards, regulatory requirements, and issuance of appropriate reports. The standard applies to all firms with implementation tailored to sites, operating, and characteristic of network application. What is the fundamental principle? Reasonable assurance. There are 6 pillars of quality control in this. What are the pillars? SQC says 6 pillars: leadership responsibility, ethical requirement, client acceptance, human resources, engagement performance, and monitoring. Now, I don't have to individually, I'm not going to this thing, but I just want to tell you leadership is somebody who's the top. He has to take the responsibility for the leadership and he has to give clear messaging down the order so that everybody is understanding the same message of quality. And ethical compliance, I don't have to say, so we have to be very ethical and objective and competent and confidentiality to be maintained, especially today DPDP Act has come. So we have to be very careful with the client data. We are getting lot of client data, which are privacy matters like your Aadhaar and PAN and all that. These are all in our folder. So any leak is happening from us, we will be in trouble. And mind you, the penalty under this is huge. We have to be very careful with the DPDP Act. We have to at least have a session on the DPDP to understand the implication of our chartered accountants because we are holding client data, mind you. Client acceptance, whenever a new client is coming, we have to ensure that their integrity is clear, their competence is okay, whether we have the competence to handle it, and all those things we have to accept and then we take up the audit. Human resources, obviously, we don't have to tell you how we recruit it. And now, as you will complain that, there's no staff, how do we do it? But we have to have policies for that. Engagement performance, again, we have to have consistent execution through standardized process as a checklist and all we have to maintain. We will just show a little bit on that a little later. We have to supervise the work and consult if required any areas which are not done. We have to consult with somebody and make sure that the audit process is perfect. And then we have to monitor on a regular basis through periodic inspection, ensuring systematic effectiveness of the policy compliance. Again, these are all detailed one, all this thing, ultimate responsibility, CEO, cultural messaging, resource commitment, performance recognition, and all that. How do you do it? Independence, very important that every year we have to take an annual confirmation of not only the partners and all the personnel that of the independence. So any client that is there and they are related to any of the staff, then they should not be given the audit. So we have to get a confirmation that they are not linked to any of the clients. If there is something, we have to ensure how to mitigate the threat. Client acceptance, as we have already seen, integrity of the person, then we have to see whether for that type of industry, whether technically qualified to do that, we have to be careful whether we have the personnel to handle that, whether we have enough resources to handle that. It's not one person may be good at it, but whether everybody put together will be got. Only one person may not be enough. So maybe suppose 10 branches are there. Maybe one person knows the industry, but that is not enough. You can oversee it, but obviously we need people to go to all these branches. One person cannot do it. Then ethical compliance, whether ethical requirements identify and resolve potential conflicts of interest, if any, that also has to be done. And documentation, of course, is a must. Human resource, again, I'm not going to it. If I tell more, then it will be a problem because everybody is so angry about the non-availability of articles and training staffs and staff and all that. So I'm not getting into that. Engagement performance, again, or the engagement partner has to ensure that team briefings are happening, especially for large audits. Small audits doesn't happen. Smaller firms, what they should have the regular, meetings they have to have. They have to have regular, training programs and all that to ensure that the messaging is clear. Supervision has to be done. I don't have to tell you, you are always there to check the work and do it. Standardization. But again, these should be documented. That is very important. The review process, consultation requirements, and resolving differences. I'm not getting into this. Now, I am not too sure whether I can show it, but from here, I don't know whether it will go there. Okay. Now, this is the form that we have done. I just want to tell you, as I told you, Form 1 is the application for that. It's a live one which I had applied. I'm going to straight away to that particular form area where here, general controls based on SQC. This is what I just wanted to mention to you. See, it's saying you can, implementation guide is also there. It's given the implementation guide. The six pillars that I was talking about, all are coming. See, leadership responsibilities within the firm. All the questionnaires, if we go through itself, we'll know ethical requirements. Just now we saw acceptance and continuance of client relationship. This we saw human resources. We saw engagement in performance. We saw. So these are all from the six pillars is what is being done. Right? So I'm now, engagement quality review control, which means that the work that has been done by one person should be reviewed by another person before he issues the audit. Again, this is not everything is applicable for listed companies of finance training. Plus, engagement meeting firms establish criteria. Some firms may have the thing that it should be checked by another partner before it is signed off by the main partner. Of course, there is a time constraint here. It is better to get it done so that there is a record of it that somebody has checked it. But today, I can tell you that in the recent NAFRA orders, they are also penalizing the engage, not only the engagement partner, but also the review partner. They also this thing they are also reviewing. They are also penalizing the NAFRA is penalizing the even the not only the engagement partner, but also the review partner. Quality review partner also is being held up why he did not look at these aspects and things like that. So even the person who is reviewing has to be careful. Now, if suppose it's a proprietorship, how do you do it? A situation demands that you need, then you have to get it done by another person who is an external person with sufficient experience and authority for listed entity audits, must have the partner level experience. Then you can ask him to do it for you. Basically, you have to pay him, otherwise, he will not do it. Now, monitoring and documenting we have seen. So, periodic inspection can be done, systematic evaluation, corrective action you have to take, annual reporting can be done. Now, the most important thing is that the SQC that we are talking about, now that is changing. So, from SQC2, you are going to come to SQC1, SQC2 standard. They're breaking it up and they're going to name it SQC1 to SQM and SQM2. And when is it applicable from? April 1st, 2026. So this was compliant based. This is going to be risk-based quality management system management. This has come last year actually. 2024 itself has come, but the date they have given is from 2026. So obviously the problem is if you're going for peer review, as you saw, peer review that format was based on SQC. Now obviously if we are going to do subsequent to that, it will be based on this new standard. What is the main difference? You see, there are six pillars here. Here there are eight pillars. What are the main things? You look at this was called human resources. Now it is called resources because resource has been expanded to include technical technology resources also. Because today, without technology, we cannot survive. And they've added something called information and communication and so on. Some minor changes they have done. So again, each and everything, I'm not going into that. There are certain things, obviously, they have done some changes. The detailed one we can discuss later on as a separate thing because it's not going to interest you at the moment. The only thing is that peer review, if it's there, we have to be clear as to what are the changes. Now, here one important thing, SQC1 requires that 7 years you have to maintain the documents. SQM1 also requires 7 years of such an or such a period as may be specified by SCA for engagement under SA. Now, here, when the SQM was suggested by Institute from SQC, NAFRA protested. They did not say. They said that this is not okay because we are the people who are supposed to issue the standard. Ultimately, there was a standoff going on between them. And finally, whatever NAFRA, some minor changes they asked, that was done. And finally, NAFRA issued this also. So that's why it was resolved. And that's how last October or November 2024, November, I think it was issued. It was notified basically. But it will be effective from April 2026 onwards. Again, the same thing. I'm not getting into that. This is EQCR. Now it is called EQR, dedicated standard. It's a separate standard. Earlier it was part of SQC1. Now it's a separate standard for EQR. That is a quality control. That person who is going to check it, that person, that details are all given in the SQM2. Here there was a 7-year partner rotation for listed entities. Here, 2-year cooling period of before engagement partner can serve as a EQR. So A was done the audit for a company. Now, after that, if he wants to become an engagement quality control partner for this one, then for 2 years he has to wait. Then only he can become a quality control partner. Okay, engagement quality review partner, quality reviewer. If he wants to become, he cannot do it immediately because he has just done it. So he cannot do that. 2 years cooling period is required. Mainly, what they are saying is from inspection, you have to go to root cause analysis. Everywhere we see root cause analysis, say any issues there, but to go to the root cause and find the reason and then take corrective measures, remedial measures. Again, key conclusion, this is a dynamic system. The new one, SQM, continuous improvement and strategic integration. So they are fundamentally changed the auditing from compliance checking to proactive quality management. It is through enhanced governance, accountability, and resource management. So that completes the SQC. Now, I just want to show you some of the practical implementation work, at least I am aware of, which I want to show it to you. So you may ask how to implement all these things that you have told me. So one of the first things that I suggest is these are the the registers. Attendance register is a must. Invert book. That means that when the data is coming by tally or if your physical books are coming, should record it. It's very important when you start in the work, this is an important record that we need to maintain. Nowadays, softwares help you to do it. If it's software is there, fine, but it has to be recorded. Then meeting book. That means if you are conducting some meetings within the organization, then that has to be recorded, especially staff meeting when you do and you are training the staff, that needs to be recorded. Then billing register, UDIN register, return register, I want to tell you for peer review, this reconciliation is very important. From UDIN register to this has to be, matched. So ensure that all are recorded. This is a standard format that we use when we are doing the work. This will ensure that actually a review has been done by the partner because these are the work that has been allotted to the staff. This is the number of days budgeted. This is the actual days taken. This is they have done when the statement done by whom, when it was allotted, when they have completed, when email has been sent, when it has been received by the senior, that is me, when I have scrutinized it, when it was discussed. If I have to send a letter, that will be mentioned here. When it was discussed with the client, when it was finalized by me, when the return was completed, and when it was filed. These are all things that is being recorded. The same thing what we do is we are putting it in this also again. This first part is what you have just seen there. And This is an additional thing which you need to get. What are those? Whether you've got an appointment letter obtained, whether non-tax audit checklist has been done, completed, whether tax audit if it's there, that is completed, certificate of stock from management or managing partner has been obtained or partner, certificate of usage of digital signature is obtained. It's not applicable because now individual not required. Letter of representation has been obtained. Yes. Finance statements approved by client. Yes. That means they have got it signed. Final trial balance tallied with the statement to be obtained because now accountant has to complete it and give it to us. But we have to get it. Final tax audit report are counseled by the client. Yes. So even tax audit after upload, what I do is I'll take the report and send it to them and I'll ask them to sign in the last page, the 3CD part, I'll ask them to sign it. This is what is required because they are only technically they are the people who are doing. We are they are only filling it, right? This all helps us. If we keep it in the record, it's good. You can say where is the time and all. If you plan it, you can do it. Now, this is a standard checklist for non-tax audit. Similarly, we have for tax audit also. And there are various general turnover, part A, part B. Obviously, this keeps, you have to keep on updating it as and when the changes are happening. This is sample check timesheet that I want to show you how we have timesheet. If the timesheet is not given, they will not get stipend or the fees or the salary or whatever. No, it doesn't open. Ah, thank God. Good. Now, if you look at it, so this is the work done by one article clerk for November. What is the work done? How many hours they have done? Which day they have gone? So standard, I have prescribed 7 days. 7 days the work that they have to do, 7 hours a day. And similarly, for concurrent audit and the bank somewhere, tax audit, this thing what they have done, other office work, how they have done. Because these are general, we cannot separately bill that. That's why we kept it. Like that, if they have taken leave also, that's recorded. And how many days they have attended, how much working days and how much leave they have taken. All is recorded. See, there are 2 days taken, that is what is two. Apart from that, we have a software which also we are been specifically, mm, we have got it done long time back, but it's not very good, but at least does some work. So here, each and every this thing work is recorded in this. That one, the first one that I show was Excel. That is good enough. We don't have to have a software. This is good enough. And here, every day they are recording what work they have done. What is the individual work they have done, total number of days. So 168 days will match with the 168 hours, 58 hours for that. So basically 168 into 24, 7 into 24 will give you 168. And then lastly, what work they are doing at that time, what is the time allotted, and what is the number of hours they have used work till the last month. This month, how much they have done? 39 hours has been done. And it's not complete. Once it's complete, we will know exactly how much time has been required. Next one that I want to show is a tool that I use in the mobile, which is they can also open, the staff can also open, which is a very simple tool where we can control it. What is the work allotted? What is in progress? What is done? This can be done. So we will know exactly where they are, what is the situation. You can allot the work also. For example, this work has not come, but I've already allotted to the staff. I can, if suppose for some reason they cannot do it, I can shift it to somebody else also. Very easy to do it. It's very helpful. These are ways of controlling the work, and also obviously documentation also gets done. These are the other things that I have mentioned already, which we are maintaining. This is the appointment letter for each work. hereby appointed as tax auditor for the year so much. These are standard, very simple formats you can develop and do it. And we are hereby giving here the books of accounts for the purpose of audit. Next one is engagement led for tax audit, engagement for tax audit. And here also all the things their responsibility, our responsibility, we are getting it done. This is management representation letter, which we have got it from them. As I told you, without getting all this signed, I will not sign. Because anything that you want, you can get it signed by them before your signature. Once you sign and already return is filed, then they will not bother. They will forget all these things. So my suggestion is make sure that whatever you want to do, get it done before you say sign. Of course, it's trouble, but you have to make a system and it's getting done. Now, this one is stock. So physically taken and valued by me or us and amounts to so much. It should match with your statement. Apart from that, I also try wherever stock tally is there, we can take that printout and ask them to sign it. If it is not there, also ask them to prepare something like this. If value is rate is not there, doesn't matter, but we will have to get it signed by them where the quantity is there and even just value is there. That's good enough. Item wise, they can do. If they are not able to give it item wise, they can give it group wise. For example, say comb plate only. Individually, if you don't want, just take the comb plate all together, ask them to give it. Grouping all the comb plate all put together, they can do. This switch, one-way switch, that can be one group, right? So that way also we can tell them. So these are some of the things that I wanted to tell and discuss and share my knowledge, whatever little I have got, so that you can improve on your documentation and the standards verification. Now, the final thing that I want to tell you is relating to all of you are waiting. There is a word called AI in the topic, and I have not seen it, is what you are saying. Let me try to explain that. So AI in audit standards, how do I implement it? I've shown all these things, checklist, but it again, it's very easy to implement today, especially today in the generation of AI. I'll just show you and you can build up on that. I hope most of you have gone to this site. I'm going to log in. So I've logged in to the Institute CPT. Now, what happens is, what has the Institute done? They have taken all the boards of the Institute and the committee and all the things that we know, Accounting Regulation Board, Internal Audit Board, Digital Assurance Board, Direct Tax Committee, Ethical Standard, Indirect, all those, each they have created a separate GPT. Now, this GPT is linked to ChatGPT. So they have actually created a private GPT, a custom GPT for each of these. At the top level is, the chat GPT. So underlying this, they have created it for all the standard. What they have done, all the resources relating to a board or a committee, they have added to that. And when you click here, any resource of the institute comes up. Any resource of the institute that is coming up. So just example I wanted to show you. Yesterday I generated, I've given a prompt. Let me take the prompt. You'll understand so that I don't waste my time on that. I have given a prompt. You are an expert in auditing standards. I want, now mind you, we are in the environment of the auditing and assurance standard boards. It's going to look at the data that is available, resource that is available of the auditing standards and other related, whatever resources available. Now, you are an expert. So what am I saying? You are an expert in auditing standards. I want you to give an engagement letter for conducting tax audit of a client below 5 crores. You can do whatever you want here according to your requirement. You can do it, and it will give you a standard format here. So beautifully it is given. See, if you give the name, your client name, you fill up all these things and then bring it. Scope of audit management, responsibility, auditor's responsibility, limitation, turnover, confidentiality, fees, and whatever, blah, 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 they will give it, whatever. And beautifully it is come. You just need to copy it, paste it in a Word, and get it signed by the client. Simple. Similarly, all the checklists that you want, all the representation letter, if you word it properly, it will easily give you, and life has become absolutely easy for us. Absolutely easy means absolutely. I know some of you are using it for, writing appeal notes and appeal drafting and all that, or even replies to income tax department. I'm sure these are wonderful things. So additionally, I just want to show you an example of how Institute has done. This I have developed for in my custom GPT for NRI related guidance. It's an internal GPT that I've created, a custom GPT. How I've done, I have created a custom GPT. I've given some, details to it to give the persona for it. And then I have added certain resources that was available. And any question that you ask, for example, this is standard question that I put in. This is what is the time limit for stay of an NRI in India without any, so that question automatically, without getting taxed for its foreign income. See, answer is there immediately. This is something wonderful. Cannot imagine what is happening, special relaxations and so on. So much of clarification, so many things, practical things. I don't know. I mean, this is something wonderful. We have to get into it and make sure that we use it. Similarly, another thing that we have done is so that understand the resources under this is the main some files that I have collected and that I have added. Only from there it will pick it up. You can restrict that also. If you wanted to go to the web, you can give it like that. Another thing, tax audit assistant I have done. Here the resources are guidance note. This I have done for the articles to do it. So if the articles doesn't know about the 269 SS, kindly explain section 269 SS to a 10-year-old. Giving the easiest way possible with language. So the uh, the scope of this is enormous. You can use like anything, and if you are using AI for audit, I think it will be fantastic. Even for implementation of auditing standards, it's become very, very easy because it has basically democratized the entire system. On we don't have to ask anybody, we don't have to find any books. We just go to the proper way. You just need to how to operate, give the proper commands or prompt to the AI and or Chat GPT or whatever, and you will get it. I would suggest Chat GPT paid version you should do today for from November 4th onward. The paid version is also free. For 1 year they have given. You should immediately make use of it so that you don't get restricted because earlier the paid version only allowed you to get lot of prompts and detailed analysis and all. Today that is available free. You should make use of it and ensure that in fact, for those who have Airtel connection, they can use Perplexity, that is free. And for 1 year, they have given free. So these are the times we have to definitely get used to AI, especially the models that are available like Claude or Perplexity or ChatGPT. I would suggest start with ChatGPT because certain uh, platforms are good for certain things. So accordingly, as you start working on it, you'll learn about it and start improving on that. So that is what I wanted to explain today, and I hope it has benefited you a lot. And if there are any questions that you can do, there's another thing that I just want to show, but I today is time is short, so I will probably cover it later. With another software which is very important is Google LM Notebook that which you can try because learning a subject, learning something has become very easy. So I'll keep it for another moment because we are short of time. And I thank you sincerely for being patient and hearing to me. And I really thank the Institute of Kollam Branch for giving me an opportunity, because of that I could prepare it and I could go into detail of it. A lot of things I also learned about it. But one thing I want to tell you again at the end, all the PPTs, except the one or two, the last and the first one, all the standard related PPT, I have not typed a single word. Everything I've used AI and I prepared using AI, and it has given me wonderful results. So I'm only saying that please jump into the you know fun immediately so that you are updated with all the new things that are coming in. Thank you very much. I will definitely look forward to more interaction with you. Good night.